All right, folks, welcome back. This is our midweek commentary for the ICT Mentorship for April 6th, 2022. All right, so we're looking at the dollar index as our daily chart. As you can see, we did, in fact, trade up into the area we were looking for. This is our draw on liquidity, so it's been a risk-off scenario. That means futures, commodities, forex pairs against the dollar would fall. Okay, so we had that deliver here rather handsomely. The next upside draw is the 100 level. And if we get some acceleration on the upside, 102, 104, and then 107. All right, 1 hour chart here. Okay, so notice that the imbalance that we showed on the daily chart, and again, let me go back up so you guys, this right here, that's what I noted beforehand. And that's what we drew up into, clearing out the relative equal highs. And now I don't want to see it come back down in. There's a real nice little fair value gap here. I don't want to see it come back down there. Let's put it that way. I'd rather see it trade still higher and then come back in, find some support at the premium high or consequent encouragement. I don't want to see it come back down and touch this level here. So I want to see it go up above and come back down in, find some support, and then spring higher. That's what I'd rather see. All right, but you can see the reaction. Look at the bodies of the candle staying within those two levels. Premium high, discount low, that fair value gap on the daily chart. We're just consolidating here. Today was FOMC, so pretty much uncertainty until 2 o'clock, and then they came in and did a typical non-farm payroll event. If you've not studied non-farm payroll and how it used to be back in the 90s, it was basically what you saw today in FOMC. Like, it would just go all over the place. And that's why it's a carnival ride, and it's one of those things where I try to steer people away from it, and FOMC can tend to act like this. Not all the time. Sometimes FOMC can sneak out a one-directional move, but you know, it takes a lot of analysis and experience to work with that. But nonetheless, we've had consolidation and had a little bit of a whipsaw in here with the FOMC minutes that were released, and then back inside of the imbalance. So we're going to stay with the narrative that we're looking for higher prices, but if we do trade back down in here into an area that I'd rather see not occur, and that's probably not the best way of saying that, but hey, it is what it is, right? So if it drops down below the short-term low here and digs into this fair value gap, that might be a point of interest going forward for bulls, but I'd rather see it maintain what it's already got in place here, because we have a low, lower low, a higher low. So we have what, in my mind, would be a nice intermediate term low. So if we can see some upside movement, measure move from low to high added to this, sends us up into the objectives I was basically outlining moments ago. All right, 15-minute time frame. You can see here, traded above that fair value gap, broke down, tried to work into the resistance of that level, broke down, small little sell side imbalance, buy side inefficiency, market structure shift, rebalance, sells off to the low end or discount low of that fair value gap on the daily chart. Then it rallied up, traded back down into the fair value gap here, rallied up again once more, taking out the short-term high, but not without having some crazy whipsaw price action linked to the FOMC minutes being released at 2 p.m. Eastern Standard Time. All right, euro dollar. Oh, I just mentioned time. Okay, so I seen a lot of comments about time and the fact that I'm using -4 down here because I'm adjusted for New York local time. On YouTube, to save myself a lot of headaches, okay, I'm using this because I teach in those tutorials to always stay with New York local time. In here, you all know that I don't really make a big deal about daylight savings time, and there's actually been a bill introduced stating that they're trying to do away with it entirely in the United States, and I'm all for it, okay? Do it so that way it is what it is, but I have so many people, and if you read the comment section of those videos, there's a lot of people, asking, what should I put my time to? It's such a confusing topic for me because invariably they're going to ask, okay, what should it be for my time in this location of the world? Man, I'm not getting into that. Okay. I've stressed myself out years ago with that. So to avoid all of the needless emails that I'm never going to be able to get to, and then I hear or read rather, you never respond to my emails, because I have too many of them, folks. I can't answer everybody's email. I can't. Okay. So I try to do these blanket statements to try to quell the pitchfork, burning torches coming to my castle doors. You owe me an explanation about time. And to make it easier for me to not compound the issue that already exists in this mentorship, because I can't get over how many times I've stated this very plainly and clearly in these in these mentorship videos. And while the elements that I'm teaching in that YouTube model are beneficial, the elements of time, stick to what I'm showing you here. Okay. So in other words, I personally don't care about the daylight savings times flip flop. I don't care about that. So I don't worry about it because I have an extended kill zone. So I'm expecting it an hour early or an hour longer, depending upon where we're at in that scope of this, the seasonal changing of daylight savings time. So I've compensated for it. Some of you are trying to split hairs with this like it's something that's going to change, everything. And it doesn't. It doesn't really change anything at all, because ultimately you're going to need a PD array to work with. And it's either going to go up to that PD array or down to that PD array, or it's not. And there you go. Okay. So I hope I've done a service there. Maybe I didn't. Now that I'm thinking about it, maybe some of you are like, well, it didn't help me at all. I've probably got more questions now because of what it just said. It's very hard to manage so many personalities, so many folks all around the world in different time zones and different levels of understanding. They watch a few videos on YouTube and they have 1,000 different questions, and they send me emails, and some of you send me emails and you don't send me your user number or username. And I generally don't even read those emails at all. So if your username is absolutely not in the title of the email, unless the email is something that my staff sees that is really pressing, and then your username is inside the email, chances are I'm probably never going to see that email, because I have so many people all around the world emailing me constantly, and folks in here that email me, or they're trying to give me an update about what they're doing, and they give me these really long emails. And I know these videos tend to feel like I'm talking just to you and it's just you and I. Okay. Like it's two people here talking, having a conversation, but this community is huge. Okay. It's really big. And I wish I had the ability to be able to engage on a one-to-one, more intimate basis, because that's my personality. I want to have that relationship with all of my students, but unfortunately I can't do that now because there's too many of you here and there's too many of them in the YouTube channel. So I try to do as best I can to be economical with my time, but still be fair. So I try to take the hot button topics, the things like that, and I kind of like do blanket conversations with them, either in videos here or when I refer to something in a video on YouTube, they think I'm answering trolls. I'm not answering trolls. I'm answering the questions or concerns that someone that is really sincerely asking for something. And to me, I interpret that as they just need a little push over that hump, and then they'll be able to see things as they should. So it's not like me always trying to kowtow to trolls or unbelievers. I'm actually talking to folks that were influenced heavily by people that are naysayers or just talking out their rear end about things that are not true or whatever. And it has impacted their ability to want to be, a student of what it is I'm teaching. So anyway, that was a long way around. Just basically, I'm sticking to the -4 because that's the local New York time, because I don't want to get caught out on YouTube with 30 people saying, you said you use this time and you're using this time, and then it's going to be like, ugh. So just for the sake of consistency and continuity in the teaching of what I've given on YouTube, just know that I personally am not flipping back and forth with this when I'm interpreting price. I don't care, okay, because it's going to give me what I'm looking for because of the kill zone adjustments that I taught you all in this mentorship. Now, if you want to use New York local time all the time, you won't go wrong doing that. I'm just a little bit more OCD, and if there's an earlier setup prior to 7 o'clock in the morning, when it's the fall months and such, before we go spring ahead, I want to be more likely to take that if it's really there and not be concerned about it. Well, in New York, it's really not technically, 7 o'clock yet. It's still 6 something. I'll take an entry. I don't really care, because if I'm looking for something, some moves have happened a little bit early. And you've seen it also, in London. Sometimes there's trades that happen just inside of the 5 o'clock hour. Does that mean the algorithm's broke? Does that mean the kill zones are no longer valid? No, but they're not happening all the time. Just like sometimes in the index futures market, I don't personally like to take entries in the lunch hour. But sometimes there are trades that begin or turn on a dime during that lunch hour. Does it mean that the rules should be thrown out? No, it just means that that's my rule. Now, in that live account, I'm pressing the button a lot. Okay, I'm pressing the button a lot because, number one, I'm teaching that you don't have to be perfect to be profitable. I'm teaching the elements of money management, which is the number one thing you need to learn first. Because if you don't manage the money correctly, all the things you do for engaging or entering in the price, it's useless. Because if you over leverage, if you trade too much, or if you don't use a stop loss or manage the risk in the trade, it's over. It won't make a difference what optimal trade entry or fair value gap you're using. It won't make a difference. It won't matter what your bias is either, because you could have a bias and still get it wrong. So you have to respect the risk and preserve that capital. So anyway, I saw a thread before I started this recording tonight in the forum in one of the user groups, and one of the members, 21 group, titled the thread something to this effect. I studied the ICT Live broker statements, and this blew my mind. So I didn't go into great detail because I already knew what he was getting at. Number one, if you paid attention to the videos, I said that a lot of the students that come to me, they have a fear of getting in. They're afraid to push the button. They're afraid to get in. The only way you're going to be able to get over that is by pushing the button. Okay? That's the only way you're going to be able to do that, is just simply just push the button, get in it, hold it for a few seconds, and then get out. And you'll see you lived. Don't count the profitability. Don't worry about the losing aspect of it. Don't worry about the commissions paid. Okay? You're investing in desensitizing yourself. Also, I did a lot of latency tests. I wanted to see if, number one, they would debook me. I wanted to see if they would kind of like delay my entries and mess with me. I had one instance where you've seen that. It's actually recorded. It was a real thing. It took place. I've seen 2 or 3 people in the comment section on the YouTube videos mentioning how they had some issues with the CME around that same time, but not specifically what I'm saying. The market was still printing price. There was no disconnection with the CME. Zero disconnection whatsoever. This was broker related. Okay. Orders in other platforms were going to the CME at that moment. So cancel all that crap, because that's not, that dog doesn't hunt. Okay. I got them to do exactly what I expected. And there was some tomfoolery there. Okay. Am I saying they're a bad broker? No, they're doing what brokers do. Okay. If they think that you are an easy pickings, they'll do it. And then if you call them out on it, they generally don't want to do that anymore with you. Okay. You can choose to believe it or not, but I brought the evidence, folks. Okay. It's there. So, but anyway, back to that thread real quick. And I know we're talking about Eurodollar here in a moment, but I want to get this off my chest. Some of the students that were paying attention kind of corrected the guy and said, hey, look, I'm not going to lay it out there, for people that are very intelligent, because there's a lot of smarter people than me. I'm not intelligent. I'm not a mental giant. I never claimed to be. Okay, I'm a simple guy. And the things that I'm teaching, I'm not going to lay it out there so someone can go back through over and over again and reverse engineer it. If the YouTube community barked and barked and barked all this time asking for a profitable live account, that's what I've produced for them. That's it. And the profitable trades come by way of the things that's in that YouTube channel. But I distort it by doing lots of executions. So that way, nobody that does what you see everybody else doing, they make Telegram rooms about me and my content. They share my videos. They sell my videos. They have Instagram channels. They have Discord channels. They have Facebook groups. They sell my stuff. They market my stuff. And I don't want those types of things to occur. But I obviously cannot police all that. In the beginning, I tried to do all that stuff. It's just everywhere now. So, and frankly, I have bigger fish to fry. Life's spinning around at 100 miles an hour right now. And things are coming over the horizon that have my concern. I'm worried about how my friends and family are going to survive. Okay. I don't care about these crooks and these scammers on the outside, doing what they're doing. Look, they're going to sell stuff just like they sell pay-per-view access to UFC for $5 when they were doing, what was that little app? What was that app Periscope. You could watch pay-per-views on there, and all you had to do is give this guy money, like $5 to WhatsApp or whatever it was. There's always going to be a con job out there, all of it, all the time. So to gag the people out there that were saying that I couldn't take a live account to profitability or that I would blow it out in 90 days, I did it. I did the live account. Now, if you look at the winning days, study those, because you'll see that I'm using things that are actually taught in that YouTube channel. But when there's a lot of executions in there, one of two things are happening. One, I'm trying to run the account hard so that way they'll B-book me. Two, I'm hiding it because I don't want that account to look too pristine. Look at what's going on right now. Okay. And I'm only going to say this one time. And if anybody ever has an issue with this, then you're going to have to take it up with yourself and work it out on your own. Okay. All you got to do is look around. I'm the most ripped off guy in teaching the markets. Okay. They rename my stuff. They use my logo to draw people in. They use everything that I put out there. I'm an echo for sale all around the world. They're begging me to put transcripts on my YouTube channel. They're begging me to put it in their local language. And I know why, because they want to take the video and make it so they can do it in their own language. And it's just easy for them. Same way with the first group when I had the mentorship group come in here. 860 some people. And literally 100 of them were begging me to put it in Spanish, Chinese, Japanese, and Russian. And a couple of people that wanted it in Arabic. I'm not going to do that. I already knew what they were going to do. And it's already happening. Some people are already doing it. Okay, there's a couple of people down in Colombia that are literally taking these mentorship videos and redubbing them and trying to make the charts in their own manner. I'm not going to provide a nuts to bolts, zero to hero live account statements where they could edit out my name, Photoshop that stuff, and then have all the easy work of just changing that and having all the time and sales data match, because I'm putting up my actual TD Ameritrade account. Come on. I would be literally laying it in their hands. It's like a silver platter. Here, go out there and defraud everybody, because here's the proof that you can show that you have live account. Notice, look, nobody's doing the live account statements. Nobody's doing it. They show little screenshots, but they are never going to do what I'm doing. And I'm confidently doing it because I know what I'm doing and why I'm doing what I'm doing. I'm proving profitability. And I'm also baiting the talker, because I want the talker to put himself out there, because then you'll see a totally different perspective if we're in a competition like Robin's Cup. That's why I want Robin's Cup. because they're not going to take my trading statements and make them public. It's not going to be on a MyFX book so people can go back through and study and try to back test and reverse engineer what I'm doing. I don't know why it's so hard for some of you in here to get that. I'm not here to try to lay everything out there for every defrauding individual to take and simply copycat and lay it in their hands. I'm not going to do it. That's why I teach the way I teach. It takes a lot of effort. The lazy guys, they didn't hang around long enough, or they just simply started selling the videos. I got a guy in India that I'm getting ready to boot out of here because he thinks that I don't know that he's selling my mentorship for $25 a month. Ooh, wasn't expecting that one, was ya? Yeah. You'll be getting turned off. So just understand that no matter what I do, I'm always going to have somebody, even in this mentorship group, that obviously have not been paying attention. Okay. The live account shows profitability. To be honest, I could literally flip a coin and buy and sell and just use sound money management and be profitable. What? Yeah. Because that's the first lesson I'm teaching over there on YouTube. Sound money management. As a new trader, you want to make money. I get it. But you don't know the problems that you're going to bring in or invite by having live account trading. It's going to be very hard for you to stay with your model. You're going to forget what you're even there to do. You're going to see candles form real quick, lightning fast, and it's going to completely take you out of the mindset of what you're looking for at the beginning of the day. God forbid you have a losing trade, because then you're going to go into a tailspin and, oh, I better fix that right away. Oh, if it moved 30 pips, I got to do 15 pips on 2 lots. Oh, if I took 2 losing trades in the morning, I got to get 2 winning trades to offset that, before the day closes, because I can't go home with a losing trade. All these things start coming in and they become a huge factor. And I've literally pantomimed majority of everything that most of you in here have asked me. And I'm going to address something tonight. And I'm going to talk about it as a homework assignment for all of you, because if you don't do what I'm going to suggest at the end of this video, you're cheating yourself of a really good learning experience. But I already know 80% of you, if not more, are not going to do it. That's just the way it is. But there'll still be people that'll type in the forum, yeah, I'm trying to find my own model. I'm not really doing well with this. I'm not really doing well with that. And then when I reach out to them and say, hey, did you do this and do this? Did you incorporate this? Did you do the drills and exercises here? No, I really didn't do that, but I was watching these videos here. And again, that's it. That's it. That's the problem. The operator. You can't watch and think you know what you're doing. You got to get in here and practice and do the things that is not fun in the beginning, because you don't want to see a result that doesn't show probability of being profitable. See, there's a learning curve that you got to go through. These concepts work, but you have to make them applicable to your personality. And unfortunately, there's no model that is a one-size-fits-all. I've tried to do my best to do what I'm doing on YouTube. And look in the comment section. That's synonymous to what I have daily in email. Thousands of them. Okay? This is the greatest thing in the world. I made this much money doing this. This is the greatest thing, blah, blah, blah. I have no idea what's going on. I'm completely lost. How do I know which is a fair value gap? What's an order block? That's what goes on in my email box. If there's no other reason to be beneficial for me to try to communicate what it's like for me, okay, all those comments, multiply that by thousands. And that's what comes to me. And imagine you're the person, you're the brain trust of this operation that every single one of those living souls expect you to be able to sit down and type a response back to them. There's not enough minutes and seconds in a day for me to do that. Plus, be a person, husband, I can't, come on, seriously. But that mindset that's so diverse, they're all seeing the same thing. Just like you're all seeing the same video. You're hearing me say the same things. The lessons are the same. But all of you are getting different results. Why? Why is that? Because you are a unique person. This content is profitable if you use it in concert with your personality. Now, I'm going to say this and then we're going to continue with this because it's already become a very long video and some of you are like, man, come on, get on with it. I'm getting on with it. Okay. If you're one of those folks who are like, come on, you're probably one of the people I'm actually talking about and you are struggling. You're talking about things that don't make any point. There's no point to what you're saying. Yeah, it is. I'm showing you the problem is the person in the mirror. And I'm giving you the tools. It works. The precision elements, I can prove that in demo executions because no one's going to go out there and represent a demo. Nobody's going to do it. I mean, I was the only one that did it, obviously, but nobody's going to go out there and say, hey, look, I'm going to prove to you that you should give me money. But here's my demo account trades. That's why I do it there. It frees me up so I can demonstrate the things that I know, but I'm not going to lay live broker statements in the hot little hands of crooks, frauds, and scammers. Because believe me, they can't wait to the end of the year when they have that last broker statement and shows, here's what I can do at the end of the year for 2022. And to be honest with you, I've thought about it just because of the post that I saw on the forum today. Like, I don't need to do any more. I've already done enough. I'm not going to stop, obviously, but it just goes to show that no matter what I do, there's going to be people that point the finger, find fault, but you didn't do that. But you didn't do this, but you didn't do that. What about what you see here? Isn't the euro going where I said it was going to go? Didn't the dollar just go where I said it was going to go? So if you can't see that happening beforehand and know that I have to be able to do that, just like you have to know that stuff in advance before you can find consistency, because that's the beginning building blocks. Okay. So when you're looking at these charts, or if you're listening to the videos and you're hearing me talk, I want you to focus on what I'm suggesting is likely to occur. That's probability. That's my personal bias. I'm lending that to you. I'm not going to be right 100% of the time, but most of the time I am. If there's something that is a problem that I see that may be something that would undo the likelihood of something unfolding, like if I think a market's bearish and what would constitute it being a change in direction where you can then know that that occurred, like he said, this is the problem. He said, if it does this, then it's probably going to go to that other PD array. I'm not doing plan A, plan B, come back and see how smart I am. I'm telling you how, like when I did trades in that live account, how do I know when I'm going to do a reversal trade? When things that I talk about in these commentaries occur. Okay, I think this is going to be the likely draw on liquidity. But if we take out this low, hear what I just said there? That's a condition. That condition is a real world condition that makes you either completely ignore going long or what? Probe it to see if there's something that can go short. And then what do I include? The downside premium arrays. Because we only talk on Monday, Wednesday, and Friday, folks. It's not plan A, plan B, come back and be smart in front of everybody all the time. I'm not 100%. Especially in the last 2 years, I'm not 100%. It's been very difficult. But, you know, at some point you're going to have to take a step back. And it's just ask yourself, did you see profitability in a live account? Yeah. Look at the days where there's 1 or 2 trades in there. I'm showing you forgiving entry points. That's a YouTube level student finally finding his way or her way into a live account. That's what I'm showing them. That's reasonable for expectations. And the amount of money, while it's not earth shattering, I think that's something that they could strive for. It's not over the top. It's not monumentous, and it's not Olympic, even though some of you might think 20% or more a month is, but it's not. It's only 5% a week. That's easy. That's literally easy. But being content with that, that's not easy. Because if you do it for a couple months, all of a sudden you want to start spreading your wings and say, well, you know what? What happens if I try to go with 50% a month? Then you start taking trades and you start looking for things that may not really be in your model. You feel like you're getting cocky, arrogant. You feel like you found yourself and you just want to show the world. And then you get yourself into a potluck where you're in a trade. You already know that it's probably not the best conditions for you, but you just don't want to close it because what if it's a runner and you found a jackpot trade? Then you have that internal wrestling match. And if you ever traded with live money, you know what I'm talking about. I don't want to kill this trade. It's not making a whole lot, or it's just underwater a little bit, but you just can't pull the trigger to get out of it. That's what getting outside your model will do for you. I have a student right now from 2016 who's struggling. And we've discussed where their problem areas were. They felt that they were strong with their bias, and by discussions and walking out a week beforehand, they explained to me what they expected. It was against what I had already expected, and I outlined the obvious side of it. That would be the opposite end. My side panned out, theirs didn't. So it's one thing to come at me and say, these don't work. But when you tell me that, be prepared to show me what you've been doing, because that will show me where you're lacking. Then you pour your efforts into fixing those areas, fortifying them. And then over time, you'll get it. But anyway, you can hear I've gone through a lot of emails and I'm addressing certain individuals all in that little bit of a micro rant. So if it didn't apply to you, don't worry, wait around. Those things will apply to you in time. So euro dollar, I mentioned that we were going to draw below this low here for sell side liquidity and below these little devils here. We swept into that. Ultimately, I think we're likely to sweep below here if we get the continuation upside on the dollar. Now, it might want to pump up into this little area here. It doesn't necessarily have to hit this low, like breaker level. I don't think it needs to do that. And in fact, it would be better if it left it open. But if it does run up in here, watch and see if there's any sensitivity there overnight going into, we're at Wednesday, Thursday. Yeah, Thursday or Friday, we might get some kind of reaction in here. But ultimately, I'm looking for a continued run down below here. Why? Because we had this one run here, second run here, and third run here. So it's like a three drives pattern. And we had higher dollar. Global front being what it is, war, all kinds of uncertainty, food prices going through the roof, energy issues. You know, if you're a charter member, by the way, can you do me a favor? Now, listen, if someone already makes a thread, don't make your own thread just to have it too, okay? Be responsible and look in the forum in your user group and see if it's been created. But if you would, those individuals that are in the UK or in the Eurozone too, if you could kind of like create a thread and kind of like give me, if you don't mind, I mean, obviously don't feel compelled to do it, but I'm just asking because there's a lot of you here. And it would be beneficial to me, plus it'd be beneficial to the folks that are here. But if you're seeing like things that are local on your level, like energy prices, the ability to get energy, because of the Ukraine-Russia thing, that to me is important. And I'll comment on things if I see that feedback that I'm looking for. But again, I'm not inviting you to create your own individual thread. Find one if it's there and just participate in that one, because that's what I'm going to look for. If I see multiple ones, I'm not going to let them exist. I'll take the first one and the other ones I'll delete and remove from the channel because I don't want all that extra stuff. And the last bit of business for home keeping, or housekeeping rather, I'm mulling over the idea of a Telegram channel or Discord room instead of the forum. There's a lot of reasons why. I won't get into it here, but I'm actively pursuing one or the other. Okay. The reason why is because everybody here wants it, have it your way forum experience. And there's too many of you and I can't accommodate it. And I'm tired of reading the email saying, but I would really appreciate if we could do this or that. Listen, I'm not going to do it. Okay. When I opened the control panel up in the past where people could have, they had access to their control panel and you could also see who was online, who wasn't online. You could pull up profiles. We were hacked 2 times and they did a lot of damage going through that window of access and messed up a lot of stuff, messed up individual accounts, put posts on the forum that were never made by that individual user. It was bad. I ended up banning people that didn't deserve to be banned. I had to bring back in because they proved that they didn't have access to that. And I looked at their ISP addresses and they didn't match. It was a mess. So, and to be honest with you, this forum has become a management nightmare. And I think it would be easier if we all just had one place where we all just come in there and there it is. It's easier to do. Now, I'm not proficient, obviously, with Discord. I don't know anything about it. I know it exists, and I know a lot of you have suggested that to me. I just don't know how to manage it. Okay, so I would probably pick a handful of moderators. I'm assuming they would allow for something like that from each user group. Or not user group, but from each mentorship group. So that way I'm getting a nice sampling out of all of them. So that way if you see things being posted in there that are just something that I would not want to see, then you can obviously remove it. You're not to be arguing with anybody or playing good cop, bad cop. I don't want to have that type of thing either. Because I tried moderators in the beginning and all 3 of them abused it. One guy was actually selling my stuff and I pitched him out the door. So anyway, a lot of stuff that's thrown at you, I know. But it's easier for me to say it like this than to say it to the folks that are emailing me, giving me suggestions or asking why this and why that. And if I reply to that 1 or 2 persons with those ideas or concerns, then invariably next week or tomorrow or the next few days, somebody else will have the same idea or concern. And I don't want to have these constant rebuttals in an email or feel the need to have to do that. So I'm saying these things here and it's just easier, I think. And also it answers the problem of managing a server with videos. So I can throw a video into not YouTube, but I can throw a video onto Telegram and it's there. It's there. I'll have user groups. So a Telegram channel will be your user group. So you'll have members from that user group in that one group. So I'll probably make it a little bit bigger because I can't do it like I'm doing now. Because this, I'm telling you, if you saw what this forum is like, it's literally like a spider web of all kinds of, it morphed into such a huge endeavor and it's really hard for me to manage it now. So, and that's also the reason why some of you are having issues with some of you having the inability to get certain months, which tonight, month 1 through 6 comes off the forum. So if you didn't download, like I said, you're not going to have access to month 1 through 6. And I mentioned that going forward. Don't freak out because I'm going to make a decision in the coming 60 days or so of where I would like to test, whether it be a Discord room or a Telegram channel, one or the other I'm going to do. And then I could just simply upload the videos and you can easily download them from that medium, I'm sure. And it makes it a lot easier. But that's what I've been thinking about. I thought about it the whole month of March. How I can remove this management nightmare I have and still allow all of us to participate. Well, it's easier to show everything. And I know some of you guys want to have your own avatars and all that stuff. It's easier to do all that stuff that way. And it's just easy. So the nightmare is how do I only let the folks that came in the mentorship in that's my concern. So obviously, if you're familiar with Telegram or if you're familiar with Discord and you're fluent with it, just post it on the forum. And please don't send me emails, because it's probably not going to get something on my desk, right away. So if you post it on the forum, get a discussion started. I make my way through all the user groups, cycling through each day. I'll look for new threads, and if I see something that's along the lines of what I've just mentioned here, I'll engage you guys and see what's up, and hopefully that'll help me make my decision. But anyway, and also, because we had the forum hacked before, and we had DDoS attacks on not only the server, but we had DDoS attacks on the forum in 2018 and in 2020. So we had issues with that as well. So if it's in a Discord or if it's in a Telegram, can they do it? Probably, but I'm not having to worry about it. You know what I mean? So that's that. All right. So anyway, we're looking for lower prices on the euro dollar. I'm thinking if we get that continuation on the dollar higher, we'll go back into this low, maybe dig into it a little bit deeper. All right, hourly chart on the euro dollar. Nice little imbalance here. Rolled up into that on Tuesday. Consequent encroachment here. Held in consolidation a little while and then finally broke loose. Measuring the high to that low, that's what I'm giving you here. That's your equilibrium price point. Comes into a fair value gap. Balanced price range. Both these wicks and tails here. Hits that as a balanced price range and then trades down. Whipsaw because of the FOMC minutes being released at 2 o'clock. Staying inside of the range formed from the overnight low and afternoon high. And here's the 15-minute time frame on the euro. Lot of crazy reaching here. Back into this imbalance. Sold off and then consolidated here. Just a really hard day for euro dollar. Just didn't deliver a whole lot of pretty price action. Let's put it that way. This move here, I like this one, but it technically looks like it was a little early. And this is what I'm referring to with that movement of daylight savings time. My time frame in kill zones allow for this type of move. So I'm not arguing with myself, but it's not 7 o'clock. It's not this, it's not that. The kill zones are really like training wheels for you to just focus on a certain time of day where moves are generally likely to occur. Over time, you'll pick up your own subtle nuances where you'll know when to do things a little early or take things a little outside of the 10 o'clock hour. And not just because it's the crude oil inventory numbers at 10:30. Sometimes there's a trade that just simply forms it, like 10:15, 10:20, maybe even 10:40. And if you're so adamant about, I can't trade because it's past 10 o'clock, I've done this. I've traded, and there are times where I wish I wouldn't have done it, but the majority of the times when I've done it, and it makes sense to do so, it worked out in my favor. Am I suggesting it's going to be like that for you? No. I'm just saying that I've had experience working outside these time frames and kill zones where if you are a hardliner saying, okay, it only does this and only trades this way for my model at this time. In the beginning, that's good because you're teaching yourself discipline. You're teaching yourself rule-based ideas and you're forcing your focus on time first. That's crucial. Because if you just go in here and just look at candlesticks for the sake of candlesticks and you're not incorporating the elements of time of day and day of week and that type of thing, you're gambling. You're asking to blow the demo count and you're not going to be happy with the results. So to find consistency and continuity in your learning and that learning curve to be smooth and elevated over time, you focus on time elements that are largely attributed to the kill zones. But anyway, apart from that, there's really not a whole lot going on in here that warrants me more jaw booning. British pound daily chart. This one here is a little bit of a dirty dog. I think that we'll likely press below here. We've obviously seen some weakness going into the British pound, but this pair is relatively stronger than that of euro. So if you're looking at crosses, like for instance, and you can do this for your own homework and your own study, euro yen versus pound yen. Euro yen should have had a really nice drop, then rally, and pound yen should have had just a decent rally. And that's attributed to the relative strength of pound versus euro and the weakness of the yen. All right, here's the hourly chart on pound dollar. Straight up into our fair value gap in here. Also, breaker, high, low, higher, high. Don't get caught up in all these little minor moves, okay? The big swing is here to here and here. Down closed candle, that's your breaker. Extend it through. What do you have here? Fair value gap. Yes. But then you have this imbalance inside of the breaker. Mean threshold. Shoot that forward. Hammered. Consequent encroachment. Beautiful. Then messiness because of the FOMC. So rally up to a predictable level, noting those premium arrays over here, respectively. Then you can anticipate weakness going into the afternoon, and then obviously a heart attack at FOMC. And the 15-minute time frame on pound dollar. Nice little fair value gap right there. See that? Comes in, hits it once more in here. Rallies, relative equal highs, buy side liquidity, hits it. Small little imbalance here, sell side imbalance, buy side inefficiency, rallies up into it. And again, all of this is in line with that hourly premium arrays in the form of the breaker and the consequent encroachment of the SIBI that I just mentioned before going into the 15-minute time frame. And then obviously a lot of whipsawing in here. Now, I thought that pound would really wipe out that low right in here. I was actually looking at this today when FOMC was released, and it did not do that. And I was very surprised to see that because I thought for sure we were going to run that out, and it didn't. So it's back into its consolidation. So to me, that means that the pound crosses are still going to be manipulated. So the best way to do it is look for weaker currencies against pound and use the intermarket relationships that I've taught when it comes to cross-pair manipulation. You can do a search on the forum and see that. All right, E-mini S&P 500 futures. On Monday, I gave you what I felt is the next draw on liquidity up here. And I even complained about how this wasn't even the right spot, and I didn't even correct it. Didn't even correct it for this video. Michael, come on, you're getting lazy, man. This whole March being off, man, you're slipping. All right. So I mentioned how we had this fair value gap in here, and if I was wrong, this would lead to running out the low and then taking out the sell side liquidity here, below here as well. And if it got really animated below that, then we had this fair value gap and a volume imbalance. But I mentioned I didn't want to get too crazy about mentioning them, but this one here was likely, if I was wrong about it, continuing higher. Now notice, I gave you my gut interpretation. Because of all the things that's going on around the world, things are a little bit unhinged. Things are occurring in price that are a little bit surprising, but then they go back into the things that I teach and look for. And that's understandable. There's always going to be some kind of volatility. There's going to be some kind of uncertainty that comes with all the things that you would expect, like interest rate issues, geopolitical issues, war, all those types of things. But we have all these other things that you don't like to hear me rant on, but they are impacting. And they're impacting, namely, me, the man that you're listening to. So because I've been doing this a long time and I feel inspired to say what I think my experience allows for, I'll say things that I think might occur because I'm being honest with you. But go back and listen to Monday's video and you'll hear everything that I'm about to say here with before it happens event, okay? I mentioned how this level here and the fair value gap, we were just closing in that right there. Now, it could be problematic for it to trade up into this level. Go back and listen to Monday's video and you'll hear me talk about how this fair value gap was going to be the only problematic issue we would have going up into this area. Because we are what? We're long dollar. Okay, long dollar is a risk off. Risk off means what? Commodities, futures, currencies opposed to the dollar will go likely lower as a result. So because I felt that we ran above these highs here and there's a lot of volatility in the marketplace, I felt that they might pump it up here one more time. Kind of like, think like a FOMC, that type of event. That's kind of like what I was anticipating because it was due out today and they might run that high ahead of FOMC. That's what I was expecting. Okay, so that we understood what the context was, why I was expecting this high to be ran out because of FOMC today. But I felt that they could do it on Tuesday's trading, upset this whole thing here, get people thinking it's a breakout, maybe trade up into this, just tap the low end of that, and then work towards that lower level objective over here and below here. That's kind of like what I was anticipating. But because of the nature of the market being risk off, dollar higher, it's going to create this heavy weight on currencies, not dollar, and commodities and futures markets. It's going to weigh heavily on them. So any buy signal is going to be very hard for it to produce stellar upside movement. And selling will have a really nice cascading effect in price where it just keeps on going and going and going. And it's just easy to see those types of setups versus a long scenario. Okay. So anyway, with that said, you can see the fair value gap in here. We worked one more little move above these relative equal highs in Tuesday's trading, and then we had to run down into the lows I was referring to. If I was wrong about here, and I was wrong, so I'm owning it. It is what it is. I didn't get the Monday right, but the catalyst that makes it incorrect, I gave you those details. So it helps you if you want to like see what I'm expecting, but it turns and doesn't deliver like I'm expecting. How do you get yourself in line with that scenario? So you can think of it like a reversal market profile type thing. All right, so we can see the market does, in fact, run up in here, pumps up above the short-term high. This is that relative equal high on the daily chart. Breaks down, and nothing obvious here on the hourly chart until we get down into this level here, and this was today's trading. It runs up, spikes into the SIBI here, and then cascades lower. Institutional order flow entry drill here. Nice little fair value gap there. Sells off, and then finally hits the two little dirty dogs. Okay, these little relative equal lows. We swept them and then bounced off that, and then now we're hanging around near the low of the range between this high and this low. On the 15-minute time frame, a little bit more detail comes in. What does this look like here? Where it runs above this high and then completely breaks down. We're looking for higher prices based on what ICT said on Monday, but it does this, breaks down and comes right back up into that. Okay, now change gears because we're at a bearish breaker. We did not see continuation. The dollar is going higher. So we have what? Risk off scenario. It's Tuesday. ICT is not going to touch base with you. So what did I point you to? If this fails on the upside run, what are you looking for? This level down here. Bearish breaker, optimal trade entry, institutional order flow entry drill, two fair value gaps. Here, the one I showed you on the hourly, and that small little area here, I tried to get it shaded differently. It should be anchored to that low there too. But to do so, it looks like two-tone rectangle. I wanted to kind of like show the difference between the 15-minute time frame and the hourly, showing how it went up into that area there with this candle. That's what I'm representing here. So it hits that institutional order flow entry drill, breaks down, small little gap in here, hits that, and then finally whipsaws down into that relative equal lows on the daily chart. There's two little candles I was pointing to as a likely downside objective, and then FOMC just whips back above after it's been released. So we had FOMC here, breaks down, and then completely comes right back up above this high. So anyone that was selling short on FOMC if they had a stop above that high, they get taken out with a loss. And then back inside the range, fair value gap, and then we're consolidating here. So all in all, today was a little bit of a carnival ride for the market. All of the markets were a little bit disturbed because of FOMC. Now, because that's behind us, tomorrow we have some central bank speakers, and just be mindful that might be a injection of volatility as well. And then I'll touch base with you, obviously, on Friday and talk about what we might see going into next week. Alrighty, this brings us to the conclusion of this video. It was a long one. I put you through a whole lot of stuff. You gonna be alright? Have a cup of coffee, get some refreshments. Just relax, you'll be fine, I promise. Alright, so I have an assignment for you. This is going to be homework, and it's going to be a month-long assignment. Okay, so the rest of this month, here's what I want you to do. Pay attention to this person. This is a member. Her name is Destiny. I'm not going to show you her last name, and I basically copied her email so that way I didn't make a mistake and show any important data or whatever. But she's welcome to post in the forum if she's in your user group, and you'll see that she's obviously a real person. Okay, but she sends me an email and says, how do you regain confidence after a serious losing streak? When I take losses, eventually I take revenge trades because of the buildup of disappointment. When the revenge trade backfires, I find myself fighting the market instead of trying to navigate, so I put on size. And my understanding is she's like putting a bigger trade on and start gambling and take an even bigger loss. This destroys my confidence and I get spooked out of trades easily. But what's interesting is that when I start off with a winning streak, I can tolerate taking losses. How do you personally gain your confidence back in the marketplace after taking 7+ losing trades in a row as a developing trader? Kind regards, user FX21F2566. Okay, so this lady was making a case that every trader goes through this. Number one, Destiny, this is not something that's unique to you. And don't take that in an offensive way. Okay, I'm not saying you're not unique, because you are unique, but you're not unique in this respect, because every single one of us goes through this. Now, here's the thing. Your first few years of trading, you're going to have this problem. It won't be until you go through some kind of gut-wrenching pain, and it may require you to blow the account to feel that measure of pain so you don't do these things anymore. Other folks may go through a period of drawdown and say, you know what, this is uncomfortable. I don't want to ever go back through this again. So it's a matter of a personal experience. Okay, that personal experience is going to be obviously different for each of us. Some of us are a little bit more adverse to risk and gambling, and others are more inclined to, hey, look, let's roll the dice and see what happens. I don't mind reloading another account if I blow it. So there's a huge spectrum in this community and in trading abroad. Okay, there's a lot of gamblers, there's a lot of people out there that are just simply afraid and too timid to take trades. The fact that you are honest about what you're struggling with and you're observing, I like the fact that you're observing the fact that you're willing to tolerate taking losses when you start off with a winning streak. Okay, you win, you make a couple winning trades, maybe 4 or 5, 6 trades in a row you're winning, or you get 4 or 5 winning trades, and then you have 1 or 2 losses, and you go right back to winning again. That's a normal ebb and flow. That's just something that you would expect in trading, because you're not going to get it perfect. I don't get it perfect. You're not going to get it perfect either. But one of the things that your email brings out is that when you have losing trades in a series of them, number one, what you're feeling is you're wrong. And then what happens is that becomes a personal challenge to prove to yourself, because until you show your results to someone else, you're the only one that knows about it. You and the broker. Okay, and the broker's not calling you up and saying, man, what did you do that for today? they don't care. But you yourself, you have to look at yourself in the mirror. And usually it's the days where you come into the market and you feel like, okay, I know what I'm going to do. I feel confident I'm going to make money today. But you really don't have your plan together. And what do I mean by that? You might have a bias. You might have a target. You might have an idea of what you think might happen. But if you go back and look at those days where you have a horrendous over-trading type event, those are the days where you did not really do the homework that would be required to work out your trades. Because if you did, this is how you know this is the facts. If you did that, as soon as you took 1 or 2, at max 3 losing trades, you would know you're outside of what you already set your mind for as an expectation for that individual daily candle and that individual session, but whether it be London or New York. That's why it's important to have those boundaries established early on. No more than 2 trades per session, no more than 4 trades per day. Best case scenario, okay? But usually what will happen is a trader will go into this idea that they figured themselves out, they figured out their model, and they start just rolling the dice a little bit more than they should. Or they get to the point where winning no longer has that feeling of, congratulations, you're doing something good. You start wanting to do more trading. And then eventually what will happen is you've invited the inevitable, which is a losing trade. Now, one losing trade making a visit to your account is not a big deal. It's inconvenient. It's something that's going to happen, but you can't avoid it. Okay, you cannot avoid that. What you are looking to avoid is turning that one single trade into a monster drawdown. Okay, if you're saying 7+ losing trades, my experience means you probably had more than 7 losing trades. And you're just tossing it out there as this is something more than trivial. It's probably maybe almost double that, because that's usually what I see developing students from YouTube in the first year, members when they go through their stuff and they get to the demo point of trying to forward test it. They have periods where they're having like 10, 12, even as much as 20 losing trades. That's normal in the beginning because you're trying to find yourself, you're trying to find your model, you're trying to find what it is that you're looking for that's going to be a consistent setup that you're looking for each time you go into the marketplace. So, number one, you have to have limitations on how many times you can take a trade. That means per session, per day, per week. Because that's the first thing you're doing is preserve capital. The second thing is you have to remember what you're doing, why you're doing it. Each time you take a loss, revisit what it is you're trying to do. Make sure you're adhering to that expectation, that model, the rules you established for yourself. And if you are making any decisions outside of that, the adverse reaction or results that you're getting should always be attributed to that. Not the model itself being broken, not the concept, or you, the trader, not being able to make money. It's you, the operator, that's operating outside of the model. So the benefit of doing that is, number one, trusting the model, trusting the rules, and controlling yourself. Personal responsibility, self-discipline, 2 crucial pillars of consistently profitable trading. You cannot be consistently profitable if you're not consistently following a rule-based idea and you're responsible. If you're not personally responsible for yourself and your actions, you're gambling and you're going to lose control. And then because of that, because subconsciously you are gambling, because subconsciously that you're really not following a model, you're not following the plan they've outlined, you haven't really done the outline for what it is you're going to be engaging. What you're doing is you're hoping and praying by putting a transaction in and seeing if it works, great, this will feel good. But if it doesn't, I'm going to get mad and pissed off, and I'm going to go in there and show the market how mad I am. And that's why it eats and erodes your confidence, and it scares you out of trades. Even when you get into a trade, if you would have held on to them, they would pan out and be profitable. But because you've done damage psychologically to yourself, when you're in a trade, you're so worried about having one more issue, one more instance where it didn't pan out, because you're at your wit's end now. You can't tolerate it anymore because you have adopted, for that moment in time, a period of time of toxic thinking. And given enough time, that toxic thinking becomes physically manifest. You'll start feeling it. Like depression is a physical feeling. You'll feel it. It'll make you sick. It'll make you anxious, and you'll have anxiety about taking the next trade. So the way you overcome this, number one, is doing what you're doing right here, is identifying the fact that you are having the issue, you are observant, and you see the things that are happening personally within yourself. Because there's a lot of students that I've had come through my fold that will say some of the things you're saying, but they do not mention the things that you're stating here about how it's killing your confidence. Because they'll come at me, because typically the man in them thinks that I'm talking cavemanese. And cavemanese means, ooga ooga, I am fearless, ooga ooga, and I follow all rules, ooga ooga, and I'm going to be profitable. But something's broke. Fix it. So, that might be a crude over, simplification on the way I internalize most men when they come at me with this issue. They don't ever say anything wrong about what they're doing. They think there's something I'm holding back. Okay. This is why I love the women in this community, because you're honest. You don't beat around the bush. This is the problems. These are the things I'm observing. And how can I correct it? That is a responsible person. So you have those traits in you. Okay. You're being honest with yourself and me in this communication in the email. So you have the elements to fix it. What's lacking is the discipline to adhere to a model, and also knowing when to kill it. When's the time when you pull the plug? Okay, did you take 2 losing trades in a morning session? Okay, then stop. If you have 1 winning trade and a losing trade in the morning, maybe, not always, maybe it's up for you to decide this. Go in the afternoon and see if you can get a trade. Now, when I say morning and afternoon, that's for futures, index trading. But if it's Forex, if you have a losing trade in the London session, then try to go for it in New York. But if you have a winning trade in New York, why would you want to risk it in the afternoon? So if you made money, start by stopping right there. You made money. Let the day close and be profitable. You have to have limitations on the day. Total trades, no more than 4. If you do anything more than 4 trades right now, any of you, I don't care, even if I'm talking to the 2016 members, if you're doing more than 4 trades right now, you're overtrading. You are inviting ruin, because this type of thing will creep in. And the volatility in these markets, sometimes it'll spike up real quick and you're like, oh man, this is going to start running. And you take the first pullback into what you think is a fair value gap, and the only thing it's doing is pulling back to the middle of the range and staying there. And you're going to cuss me out under your breath. Oh, these stupid things don't work. When it's the environment you're trying to force trades in. Less is more. Keep the focus on being responsible. Don't allow a lot of trades on the week. Set a maximum number of trades. And don't think because you are allowed by definition 4 trades per day, that means you can get 20 trades a week. Don't think that. If you have 4 trades per day, but you've been profitable in the morning, don't risk it in the afternoon. Why give it back? Or if you made money in London, don't risk it to give it away in New York. Or if you've taken only New York trades, and that's your setup or model based on that kill zone, if you're taking a winning trade then, don't take another one. Don't take another trade. Why risk it? Go home profitable. But ICT, I only made $250. Right. That's $250 more than you had when you first started. That's how you build personal discipline and self-control. Be content with going into demo after if you've booked a hard profit in live account. I'm assuming that's what you're asking. You didn't mention it in your email, but I'm assuming that's what you're getting at. But even if it isn't, and even in your demo, if you demo trade and you make a profit in demo, paper trade without actually executing the demo if you want to do something else for experience. But teach yourself to stop. Like you have to force that. You have to force that part of it. Okay. Otherwise, if you don't do this, you will blow the account. You'll put so much drawdown on. It's for a new trader, new student. It seems like it's an overwhelming task, and it's an Olympic feat to get it back. And the first year, I've had so many people come in 2016. They were in drawdown, trading other stuff, and they expected me to be able to fix that for them in a month. And it's something that can't be fixed in a month. Like, there's so many things that have to be recalibrated, forgotten, learned, and then you have to learn a lot about yourself, and you have to ring in your personal emotions and psychological characteristics that will overwhelm you if you've never really dealt with them. You know, this is why trading is like a scrying mirror. A scrying mirror is, you know, without sounding like a witch or anything, because I'm not a witch, but if you look up what a scrying mirror is, it allows you to look at this black space like in a bowl, okay? And then you get a vision of something, okay? It's kind of like that. Instead of looking at the mirror, when you look at your mirror, it's lying to you. You think your stuff doesn't stink. The new lip gloss you're wearing is the greatest thing in the world. Your hair is laid out just right. Your eye makeup's perfect. And gentlemen, your goatee's perfectly edged. You're on Fleet Street, okay? Everything's right. But you're lying to yourself. We don't see you like that mirror does. It's actually backwards. If you've never seen yourself in a reverse reflection of your own mirror reflection, it's astonishing. I discovered my nose is bent because I had it broken when I was a little kid. Grown man punched me in the nose, thought I was throwing snowballs, and I didn't do it. But you, as a woman, you have stronger characteristics than that of a man when it comes to the psychological aspects of trading. All of you women in here do. I've not seen one lady in our mentorship that does not have these attributes. Now, there may be some in here that's never reached out to me with these types of issues, and maybe they don't have those characteristics, but everyone that has similar emails like this, they've always had honesty. They own the fact that they are gambling, and they start getting reckless with their trading and decisions, and they get impulsive and they get emotional. Now, gentlemen, don't look at this and say, yeah, because women are just too emotional. No, that's not true. Because I have a lot of men that literally have emailed me weeping in tears because they can't get past something like this. They can make money. They can find winning setups. But then all of a sudden, something happens, they unravel. And the main thing that always reoccurs is they deviate from their model and they lose self-control. That's the two things. Well, with the exception of overtrading. So I guess there's three things. There's overtrading, they deviate from the model, and they lose control of their self-control. They completely come off the rails. If any one of those three things occur, you're going into drawdown. It's just a matter of time. It's going to happen. And then what happens is once that begins and you have a series of now 2 trades that are losing, okay, well, it's 2 trades. Let me see what the third one's going to do. Because you want to do something to remind yourself, hey, I know how to trade. Let me just put something here because I think it's going to go up here 10 points or 10 pips, and it'll make me feel better about it. That's what I was kind of doing when I was trading bonds in the 90s. When I would have periods of drawdown, I'd be like, okay, well, I just lost $6,000. I need a feel-good moment. This looks like it's going to go up 11 ticks. Let me buy that. Put 3 contracts on. Oh, I wish I would have done that. It was another loss. So instead of making me feel better, I was looking for a fix to not feeling good about myself. And if I would have won, it really would have done me a disservice because I would have rewarded myself with bad decision making. So you have to be your own parent. You have to be your own coach. You have to be your own taskmaster. It's hard. It is hard. But that's the personality characteristic of the analyst in you. The analyst has to control the trader. And the trader reminds the gambler to stay seated. That's the way it works. Now, is this easy to apply? No. It sounds easy to talk about. But you have to stick to doing the things I mentioned here, and also with the mitigation of losses and the teachings I've taught about that. But I want to use this, and I mentioned this is not an email that was just sent to me today. 12 days ago, I replied to Destiny, and I told her that I would use this in future videos, and we're here now, okay? I would like all of you to go to TradingView and open up a brand new, perfectly never touched demo account. Set it to $100,000, okay, of demo money, paper money. Then what I want you to do is I want you to put on really big trades to make it go down. Okay, purposely try to lose the money. I want you to go down about 25%. Okay, so drop it down to 75%, so, or $75,000 rather. Okay, so we got 25% drawdown, and I want you to spend the rest of this month. You have until the end of the month, May 1st, okay? When May 1st, 7 o'clock in the morning, New York local time, when that comes around, you cannot build it back anymore. That's the end of it, okay? That's the end of the exercise. But my goal for you and your homework assignment, and don't be upset if you don't do it. It's okay. But I want you to try doing what you know so far in your understanding. I want you to try to go in and correct that drawdown. Now, what you're going to observe is, number one, you don't feel the emotions because it's not real money. Two, you didn't take the losing trades thinking they were going to be winning trades. So you don't have that on your mind either. So I want you to be aware of that going in, because it's going to be important at the end of the month. Okay? But that's your homework assignment for the entire remainder of this month. I want you to start a $100,000 demo account, paper trading on TradingView. Go into a bunch of trades, just make it draw down. If it goes a little bit past 75,000, goes down to 74, okay, even better, whatever. But your goal is to try to make it back. But here's the thing. You do not try to do it in the least amount of trades. Okay, so don't try to do like a one big over leverage type trade. Don't do that. I want you to try to work at it each day. So look at your month. How many trading days do you have? What does your personal schedule look like? And assume that that was something you put yourself through. And now you have the remainder of this month to fix it. So that way, if you started this month in trading, that way you don't leave April with a net loss. That's going to be your goal. Now, you might not get it. It's okay. It's just a good exercise. These are practice sessions. These are things that will help you work towards, correcting drawdown, mitigating losses, and also it adopts, as you'll see at the end of the month, how I'm going to teach you this and go back into this whole operation. You'll see that it's beneficial with your mindset, because that's what's going to be the barrier. For those individuals that are not able to do this but can otherwise be good at trading, I want you to log each day that you work towards building that paper trading account back up to 100,000. I'm not asking you to double it. I'm just asking you just get back to that 100,000 by the end of the month. Okay? And I want you to log what your observations were about what you felt each time you did it. Okay? Annotate that in your study journal. And I promise you, the first mentorship meeting we'll have in May, which I don't even know what that date is, we'll revisit this homework assignment then. Okay? So that's going to be it for this one. I will touch base with you, obviously, on the Friday video, on our weekend commentary, but there'll be a Thursday YouTube video tomorrow night at 10 o'clock New York local time. Until I talk to you then, be safe.